Hello, everyone. Good evening, and welcome to our M Plus Online Market Outlook. And I'm Louis here from Malaysia Securities. I'm the head of research, and today I'll be sharing with you on what is the market outlook and where can we go from here. I believe that everyone would be, thinking about where and how we should be positioning ourselves. And this quarter we have came out with our report. It's always talking about the recovery team. I know that everyone has been waiting for quite some time on the recovery team, but it has not been seen for most of the countries, but except for Malaysia. Malaysia last year, we have registered a very strong growth in terms of GDP, and this year itself, what is going to happen is there is a good wow factor that we have been anticipating quite long, which is the China reopening. So, title for this quarterly outlook is Arrival of Spring, China's Reopening to the World. And our report title is Winter Always Turns into Spring. So I believe that that is the tone for first quarter. And before I start, I should go through the new user guide first before we go into all these contents that it is for our for this session. Okay, so first of all, we have account registration. You can go through the registration.mplusonline.com to register yourself if you are still new to M Plus Online. Secondly, you can get our M Plus Online research report from mplusonline.com/articles. Thirdly, we have our weekly bites every Wednesday. It is on our Facebook and also Instagram. It is just giving some updates throughout the midweek. And fourth, we have the YouTube channel, which is M Plus Online TV. You can go search our, and subscribe towards our channel. And if you still need help, you just can contact us through support@mplusonline.com.my or PM us on Facebook or call 1300-221-233. Okay, so this is just a brief update for those new user guide. Before I start, I also go through this disclaimer because this is just some opinions of mine, and please consult your investment advisor before making any investment decision. Although we can, we can provide you some recommendations. I think ultimately you have to be responsible for your trading actions. Yeah. Okay, so agenda for today is about China reopening and also COVID-19 situation in various places. Let's see what is going to happen and how can that bring us on the trading theme. Okay. Next, we have this tourist arrival data, which is very important. I think everyone should look at it from the tourism portal. And also economic review and outlook that we are going through, commodity index review as well. We'll go through, these are very important one because I believe that this year itself, a lot of people will be monitoring commodity prices, where it should be headed to, and how can that provide us some investment opportunities. Then we'll go through the market review and also Malaysia strategy, and we'll talk a little bit about budget 2023. It is a repetition of fourth quarter budget 2023 because during the time we have budget as well. Right now it's just retabling of the budget, but I just want to reiterate my view on that and how can that adjust to our position in first quarter 2023. Okay. So I believe everyone has noted that China has reopened the borders on 8th of January, and this has been helping us to select good counters, especially those that involve tourism, airport, aviation, consumer sectors. So this is part and parcel of what we have done, and given us an opportunity to release the report with those counters just in time to capture the recent wave. Okay. Then we go through the mainland China statistics on this. It is, although it's spiking, but it is not into a very severe situation. Although you can say that China has been seen very very bold in terms of on this reopening because of zero COVID policy earlier on. Right now, they have started to open up their borders and things like that. But my view is still later on I'll show you my view on this, and I think that this spike will be just a normal spike and it will not affect the economic outlook for the rest of the year. And I believe that China reopening is definitely a win-win situation, although that it may contribute to spike in various places in terms of COVID. But I think economically wise, I think we should be viewing this as a positive note. Okay, so before we go into any of the slides, maybe I would do a poll here. Okay, just to gather your information, your what do you think about this China reopening? So the question is China reopening positive news to the market or negative for the market? So uh, A will be positive, B will be negative. So maybe you can cast your vote here and see, what are the consensus out there. What are the audience feel about the market? Okay, so I think that is just to see whether we are in line or not in terms of the view. Yeah, so then another day, throughout these 2 weeks, um, Bloomberg came out in news, ABC came out in news to say that China is heavily underreporting the number of COVID-19 deaths. So is this good news or bad news to the market? But I did not see a lot of selling into the market, but instead I saw some buying opportunity as well. So my view is that throughout this reopening and throughout the past 3 years, I think there are a lot of COVID cases in China. They can't really resolve. But one thing that we are sure is that the vaccination rate is up in most of the places. So worldwide, at least getting one dose fully vaccinated is about 70.7% and 64.9% respectively. So I think during our reopening of borders, we are almost hitting 80% or 70-80% during that period of time in April last year, and therefore we are bold enough to reopen because our citizens has gone through a full vaccination, and that is why we are confident that we can win the battle of COVID battle by reopening, and it would not do a lot of negative things to the economy. So given that worldwide has fully vaccinated about 65%, so that gives a very good indication that most of the or above 50% of the population has already been vaccinated, and even if they are down by COVID, it will not make another big hoo-ha in terms of the medical system. So that's why my feel is that it is more positive than negative. So right now, if adult population vaccination rate in Malaysia is, getting first booster is already near towards 68.8%. So so mainly the population is already being vaccinated. So I don't see. I mean, if there is any spike, it will be that it will be a spike, but it will not dampen the negatively on the situation here in Malaysia. Okay, so maybe we can capture what is happening. What is the consensus out there? Yeah, Kay, can you put the poll up? Um, what is the poll like? Is a lot of audience here talking about positive, or is it a lot of them are talking about negative? Yeah. Okay. So yeah. Okay, let's move on. Yeah. Let me. Okay. Okay. There are some technical issue. Oh, the question can't upload, so it's okay. Yeah, I just the just to get a feel later on, if I mean, if my colleague can upload that question to you, maybe you can just do the polling later on. Okay. Yep. So let's move on to next data that I need to point out very importantly. I think throughout the since April last year, we did mention about tourist arrival data. And tourist arrival data is very important here. If you take note on the situation where, wait, hold a second. Okay. Yeah. So since last year, April, it has been all the way up to 1 million mark in July. So this information is very important because once this data is out, actually airport is already hitting the base, aviation is already hitting the base, and they are just waiting for the news to come in, the January 8th news to come in, which is the China reopening, and everything started to ramp up higher from aviation, airport to Genting related counters, and even some of the breweries are up as well. Consumer sectors are up. So basically, we think the tourist arrival data is very important. And if you take note of what has happened in China, China's nationality comes in about 200 to 300K, throughout before pandemic per month. So which means that right now it's still low base, low base effect. That only amount to maybe tens of thousands of people that came in until July. So if they open up after this Chinese New Year break, because Chinese New Year normally they would not come out, or maybe they come out, but most of them will be going back to their kampong, in China. So a lot of massive jam there, and once they are out from borders, then this will spike to maybe more than 300, because we are anticipating that this will be a pent-up demand after 3 years they have not been coming in. This is time where they come in, and this will be impactful for aviation, airport, hotel, consumer sector, and a lot of places will have China tourists, and that would help you to make an informed decision for what sector to put your money in. So we can say that I'm pretty optimistic about the after the reopening of our domestic side, because last year our growth, if you can see GDP growth rate since last year, it has been all the way up from second to third quarter. Okay, and fourth quarter we are likely to see some booster, but it will not be a huge one, because last year fourth quarter it is registering at 371.3. Normally you can see that the last final quarter normally is the strongest. So I assume that if this year can go up even towards 383, similar to what has happened in third quarter, we still have another 3% to 4% growth. But what if they can grow more than, not more than that, towards 390 or even 400 value? But I think based on the export and import numbers, we might be just hovering around 383 to 390. That's about the max for fourth quarter. So I think fourth quarter will not have double-digit growth, will have single-digit growth in terms of GDP. But whole year-wise, 2022 is definitely a positive year. And moving into 2023, I think first quarter will slow down in terms of GDP. But after Chinese New Year, March onwards, we will see a lot of growth from the China tourists, and that is what we are anticipating. Okay, so monthly growth is, you are also seeing like slow down as well. So we also think that it should go down to about 5 to 6% gain, on the monthly GDP growth rate. So nothing to shout, but as long as it is a growth at a growing pace, I think that should be not be a problem to us. And I believe that GDP numbers are some indicators of us, putting our money into certain sectors, especially, technology stocks has been down. So if GDP numbers are still showing that, export import numbers are still strong, then we might be seeing some good growth in terms of some technology stocks. Okay. So everyone is actually watching about CPI data, but CPI data is already coming down. I think last quarter we did mention about yeah. So last quarter we are looking at CPI continue to go up for the fourth quarter, and right now you can see roughly everyone is thinking that it has peaked, and everyone is thinking that it can fall. But my view is that whether it can fall straight away downwards, or whether is it still elevated, that is another question. So which means that they can stay at 5 to 6%, throughout the year, or they can come back down straight away to 2%, which is the inflation target that the Federal Reserve has set. But if you ask me, I would say that this has been done and dusted, and the CPI numbers should not go further from here. And if the market is correct about this, and FOMC will take a breather or take a softer tone on their interest rate direction, therefore we will be anticipating a slowdown in terms of the interest rate hike. Then market will be able to rally further. Okay, so my idea is that CPI numbers is already back behind us, and what is happening forward is perhaps looking at earnings data, looking at how FOMC is positioning themselves for interest rate upcycle or down cycle, or taking a pause. So the direction and also the pace of the interest rate is the one to be watched out. CPI data likely to be behind us because it has already peaked and falling. So it may not be as important as what has happened in 2022. Okay. And October's view on Federal Reserve rate, you can see that it will be peaking along March and also May period, and throughout the year and until 2024, it will be around 4.3%. Okay, so I guess you know, in the next question that I want to pose up here will be, what is your view on Federal Reserve ultimate interest rate for the rest of the year? I think we will, put in some options for you to choose, and let's see what is happening in the market. Okay, similarly, you can see that in October we have seen that the FOMC meeting is looking at, the market, the consensus is looking at 4.6% during the peak, which is this year, March and also May. Okay, and in the current position, the current view right now, the recent view has changed a little bit. They are anticipating that the ultimate peak might be 4.9% in March and also May and also June. Okay, so it is even higher than before, but I would say that this has already been factored in. And if market is moving ahead of 6 to 9 months term, then they should be actually looking at the declining path actually after June towards December, which is on the declining path. So which means that as long as FOMC is following this curve of peaking the interest rate in May and June, then slowly decline towards 4.4% at the end of the year, then we might be able to see some good trading movements of the market from this point until for the next one whole quarter or 2 quarters. Okay, so I have the results right now with me. Most of you out of the 25 person that has taken a poll is saying that China reopening is a positive news to the market, and I do agree on that. And I think we shouldn't be too fearful about the China underreporting the death. And I think as opposed to market is actually fearful about the death or the COVID cases will dampen the sentiment on economic outlook that is out of is behind us already. Okay, so that information is not as important as the China reopening, and the spending and consumption activities out there is much more. That would be the main gist about this quarter's outlook. Okay, so yeah, let's move on. Okay, so this is just another view on what's going to happen and what is the consensus out there for the Federal Reserve. Yeah, Federal Reserve is mentioning about the dot plot means the officials, Federal Reserve officials, what is their view on 2023? What is the median of the interest rate? And 2024, you can see that it is a very sharp pullback from 5%. Above 5% and back towards around 4% range. And 2025 onwards, it will be around 3%. We are not going back, longer term wise, we are not going back into the low interest rate environment, because longer term, even the FOMC Federal Reserve is talking about 2.5%, 2.5% for a longer term. So which means that we are not going back to what has happened in before, during the 0% interest, a very low interest rate environment. So we must accept the fact that we are going to into a higher interest rate environment. Okay, so but again, I have to also mention that if the Federal Reserve is going to taper further on their balance sheet, which means that they are they're unwinding their treasuries, MBS, and also tapering in terms of their buyback, okay, bond buyback. That is one thing that is lowering down the liquidity in the system, and that is also one of the fearful thing about the market, because the market has been driven by liquidity, right? So if they are tapering this, then it might affect the liquidity in the market, and therefore the market might not be able to translate to a higher territory. Okay, but I have to say that right now it's 8.5 trillion. Yeah. So given that if even though they are tapering, it is still above 7. If I use the previous 16.7% tapering during taper tantrum, 2014 until 2019, we are still having a lot of liquidity. So even though tapering will mean that it is lesser liquidity, but it is just like you are in a swimming pool full of water, but right now it's maybe just 16%, running out of water by 16%. It is still a lot of water, just that the sentiment out there is just negative about this. But overall, I will still maintain the view that if 7 trillion is still out there, in the system, I believe that it is still quite safe for the market to chart into higher territory going forward. Okay, we just need a twist in terms of the interest rate direction, and that's the gist out of the current situation. Okay, okay. Dollar index last quarter we did mention that it was still quite the uptrending tone, and this quarter itself it has actually toned down towards 101. It has been tying a link quite closely with the tone of the Federal Reserve. So if they are nearing the peak of the interest rate, then we might be looking into further downside, towards the dollar index. Because if they are not going to increase the interest rate further, then perhaps this will continue to go down further. So it is just the anticipation of what is happening in the FOMC meeting. Okay. So Bloomberg Commodity Index. Okay, this is a bit related to dollar index, but again, it is also a supply and demand. Early on, we understand that Ukraine Russia tension has been in since February, so there was a spike in all the commodities out there. But right now, it has been pulling back, but it cannot go back to what has happened in 2020 or 2019. Okay, so my view on commodity prices will be, if I would want to put my money into commodities, I would select, oil and gas or Brent oil prices, Brent oil as one of the main commodity, because Brent oil prices is more stable. I would say that as long as Ukraine Russia tension is still ongoing, having the tension, we are still we will still have the high elevated crude oil price, and that has affect this Bloomberg Commodity Index. If commodity index is still elevated, and I will not see the inflation coming down as fast as before to the Federal Reserve inflation target at 2%. So my view is that commodity prices will still remain strong, elevated. Although it has fallen quite a bit, but it will still maintain above the pre-pandemic level as for the time being. A lot of people are saying that from last time we are not so globalization, have not gone through the globalization yet. We have gone through the globalization, and right now we are going through another phase called deglobalization, because all this geopolitical tension, a lot of people have protectionist measure in their countries, even China, even US, a lot of places are actually doing the deglobalization, and therefore, if all these are having protectionist measure, the supply issue will remain, and that would actually affect the commodity prices. So going forward, we might need to pay higher prices for most of the commodity. And under this scenario, as long as Ukraine-Russia tension is still having the tension, ongoing tension, I will not see the commodity index coming down any lower than, this index is showing us 105, 110 is a support. So if the Ukraine-Russia tension is still there, I think we are still quite elevated in terms of the commodity index. Okay. So next, GDP view. Right now, we have seen U.S. GDP, into negative territory for 2 consecutive quarters. So that has been a technical recession. But going forward, will there be another recession? There is also another question mark. But given the scenario that inverted yield curve has happened every time, most of the time during before the recession period, this is what happened in 2006, 2007. Inverted yield curve means when the 2-year, 10-year has been inverted. 2-year, 10-year yield has been inverted, and that is giving us the 2008, 2009 recession, correct? So during the period whereby before the COVID-induced recession, we have a glimpse of a period whereby it is inverted. It was inverted during 2019, and that has happened for our recession in 2020. Although it's COVID-induced, but it's still a technical recession. Right now, in 2022, we are having this, inverted yield curve here, and throughout this period of June last year until right now January, it is still inverting. Okay, so what are your thoughts here? So will we go into another recession, and seeing some slowdown in terms of earnings, slowdown in terms of market? Will we see that? Okay, but always during these two experience of um, 2008, 2009, and also 2020 recession, you can see that when they announce the recession, that is the time actually to buy the shares, right? And if we see during the COVID period, when they announced, it is actually a buy opportunity. During 2008, 2009, it is also a similar, similar pattern. So right now, if they are going to announce another recession, I think that would be also another buying opportunity for long-term investment. Okay, so that is my thoughts on this. So we shall not be fearful on this, because I think through experience and through data, we are seeing that when people are announcing the recession, normally it's a buying opportunity. Okay. Okay, so just to give you the broad view about 1 year of the global index, where are we right now and versus the regional markets, and also Hong Kong, Korean index, and also China, and also S&P. So over the past 1 year, we have been in number 2. We did not really fall that much. We also didn't gain that much either. The most resilient country is Straits Times Index, which is the purple line, then followed by us. Then the most strongest recovery is seen in Hong Kong Hang Seng Index, from -40 back towards -10, and it is on par with also S&P 500 and also the Korean Kospi Index. So those are just to give you an idea where are we right now and versus the rest of the benchmark or global index. Okay, so on Bursa Exchange, what are the top performer throughout the past 1 year? It is energy sector, and energy sector has been coming back strongly, given the oil and gas earnings has been improving over the past 2 quarters. That is why energy stock has been up. The next one is the so-called the property index, I think. Then it followed by plantation. Okay, plantation. So yep. So these are some of the top performing sectors. The laggards are telco, telecommunication, and telco. Then yep. Other than that will be another one is technology stocks. Technology stock is also one of the declining sector throughout this period. So overall, I think we have an opportunity during this period, if the Federal Reserve is actually turning their tone from the current position of very hawkish tone. If the upcoming FOMC meeting is telling us that they might only increase by 0.25, then going forward increase by 0.25, that is already a win for the market. Okay, so that is just my thought in terms of the broad market view. Okay, so let's look at the poll again. Just now the FOMC meeting, Federal Reserve. What is the ultimate interest rate for the rest of the year? Is it 4 to 4.5%? Is it 4.5 to 5%? Is it 5 to 5.5%? Or is it 5.5% and above? Okay, so maybe you can get that results later on. And also, before I go into all this commodity review, I just want to mention that commodities here is actually a very good timing for us to enter, especially oil and gas. I would prefer to go in oil and gas as compared to CPO prices. Although CPO prices can actually recover back from this point, I guess we will just focus on one for now, and we will monitor for CPO earnings to go even stronger. Okay, uh, if they are going stronger for CPO prices, then perhaps we have a very good opportunity after February reporting season. Then we will reshuffle our portfolio into putting more plantation counters. But plantation counters are cash cow. Their dividend is huge, but they are not really a good investment opportunity if they are not in the uptrend tone. Unlike a lot of CPO counters that is uptrending, like United Plantation, they are giving good dividends and also good uptrend capital appreciation. But if not, then you are just looking at the bottom rebound phase to expect some windfall dividend. Windfall dividend. I expect some good opportunity for us to get windfall uh, dividend going forward. Okay, so I have the results right now. 39% voted for 4 to 4.5%, and the next result is 5 to 5.5%. Okay, so that will be the range that people are anticipating. Most of them are looking at 4 to 4.5 or 5 to 5.5. I would say that this is important, and when they change their tone towards lowering down the interest rate going forward, that is where we have we will be monitoring the index to go even higher. Okay, so I would say this year is likely to be a very bullish tone in the market. Okay, let's go to the next one. Okay, just now we haven't talk. We haven't yeah. So Brent oil prices, I can be quite firm on what is the direction as long as one of the catalysts is still there. Okay, the idea is as long as the Ukraine-Russia tension is still there, um, the barrel prices will still remain above 75 and 80 US dollar mark. Okay, and we have to understand that throughout this period of time, Biden's policy has been very green and very little investment capex has been spent in oil and gas sector in the US. So therefore, if we are looking into these two sectors, it is already contributing to a very good elevated moment or in terms of these crude oil prices. And don't forget, OPEC Plus and also Russian can actually control the production in order for them to maintain the price, the sentiment even higher. And without having all, I mean, with all this add on with the China reopening, it is also a rising demand. So given all these factors, we can safely say that the current position is to support 75 US dollar is a support for Brent oil, and likely it will stay elevated. And given the China reopening theme, that will actually boost the oil and gas, the Brent oil prices even higher. So in this scenario, we are sort of quite firm with the catalyst, and therefore earnings for oil and gas sector or sentiment for oil and gas sector will definitely be more positive. Okay. Next is about the CPO. CPO is actually trending lower after supply from Indonesia has been forced to come out, and that is where I think last year all this news came out from Indonesia was to flush the market with CPO, and that is translating to lower CPO price. And the peak was about 7,000 and above. Right now, it is around 3,008, 3,006. Okay, so my view is that we just need to wait for the demand from China to come in, and we will be able to anticipate that the CPO price is also somewhat similar to what has happened in the crude oil. We'll be able to support along 3,006 and above. Okay, so given that this level, it is very safe to say that it is a cash cow business for plantation companies, and it's very easy for plantation companies to give out windfall tax. Okay, windfall dividends, windfall profits and windfall dividend, because it is quite stable as long as they can manage the CPO price and also their operation costs. Then it will bode well for the earnings that will translate to dividends. So I think if you're targeting plantation counters, you can target those that has been paying very well in terms of dividends, such as Kim Long, Price Plantation. So these are the two companies. Okay. So gold, we don't have any proxy in terms of the gold, but we have jewelry companies such as Pokong Tome. So those are the ones that you can rely on during the upcycle of gold. But I don't see that um, we don't see that happening. Very in a very long run, this will be a cyclical play. How do you position yourself? Is yeah, you look at the earnings. Before the earnings, normally you should buy into the earnings and sell after earnings. That is how you should be playing out in gold related companies. Okay, so that is what you can do in in gold related counters. So I cannot say that you should be holding on towards gold proxy throughout the year, but as long as it comes back to a certain level before the earnings, normally you should be buying it and selling it after the earnings. So those are the way that you should be positioning for proxy of gold counters. That is normally how they position themselves, the traders. Yeah. Okay, just to give you an outlook of where is how cheap is cheap on the MSCI World and World Index, and we have been recovering from the 15, 16 times PE of MSCI World back towards 6, 17, 18 times PE. The 10-year average is still 20 times, so it is still fairly cheap as compared to 20 times. So you can actually anticipate that the World Index should recover back to that level. Then coming to wait, hold on a second. S&P 500, we are trading around 19.4 times, which is quite near, fairly near towards the 20.4 times PE for S&P 500. Okay, so generally speaking, S&P can be fairly valued, but the world index are still recovering. And even I mean, if you are looking at a more defensive play, maybe KLCI would be a more defensive play as compared to the rest of the world. Okay, so KLCI is trading at 15.6 times PE versus 10-year PE of 17.7 times. So this is to let you know how cheap is cheap based on what we have, what the data tell us. So yeah, coming to the KLCI, and we are going to talk about the Malaysian strategy, and we really want to see um, what has changed this year compared to last year, right? And how we can position ourselves towards positioning ourselves in our portfolio to gain more alpha as compared to KLCI or even small cap index. So if you look at KLCI index, it did not really move that much throughout 2020 towards 2022, and it was just hovering below 1,644. But once what is interesting here is that we have a different we have gone through all those years of MCO, COVID. Right now, we are out of that. We have been registering stronger tone of GDP growth. We are registering. We are having already the unity government. That is also another positive factor. So under this scenario, we should be able to see further upside on emerging markets, and also our side, Malaysia, will benefit out of this situation. We definitely will have a two-tier of different side of things. Okay, looking at Western countries, how they deal with inflation, and also is totally different from what we have done in Malaysia. Okay, inflation has been quite hard hitting them in the Western country, but in Malaysia side, actually we are quite well to do. Okay, our inflation are still manageable, and therefore our GDP growth will still be stronger going forward. And after we have this unity government, and as we have the 10 prime minister, this will actually provide us with some good outlook, good sentiment for foreign investors to come in. FDIs will come in for the next 5 years. So hopefully that from these few points, I believe that KLCI will be able to chart higher territory above the 1,000. So that is my view. So where do you think our market can go in the next 3 months? So KLCI will still continue to be below 1005 A, or B above 1005, or C above 1006. Okay, so what is your view over the next 3 months? Okay, so maybe you can do uh, you know we can do a poll here and see how what is the consensus looking at in the KLCI. My view is definitely we are very positive and we should be able to break above 1005 in the next 3 months. Okay. So for the small cap index, it covers about 700 companies in more than 700 companies in the Bursa exchange, and we have gone through the G15 event. During the time, it is quite tough, a tough period, but right now we have the environment, so most likely we are able to see more positive in our portfolio. I think most of you can agree on that. Going forward, based on this chart, I think we should be able to, gather more momentum in our portfolio. So that is my view on that. Um, Ace market, we are upward bias tone. Sorry about the title here. It's not downtrend tone. We are having upward bias in the downtrend formation. So early on it was downtrend, but right now it has turned slightly more positive. So most of the IPO is under this category. So that's why you can see that it is also very, very strong recovery from the ACE market. And if you want to pick those counters under the ACE market, make sure that you pick those that has fundamentals and has earnings that is not going to go bankrupt anytime soon. So those are the very stringent criteria that I put in to select counters. Okay, for the US dollar MRL strength, we can see that it has gone up towards our anticipated territory of 470 before it comes down right now. So going forward, we are still anticipating that the US dollar MRL trend will still continue to strengthen. I mean, in terms of Malaysian ringgit, we're still able to strengthen towards perhaps the 429 or even the 420 level. So I'm still anticipating that it will be the range around 420 level, up and down. So that is the range that we should be looking at for the Ringgit Malaysia throughout at least the 2023. I think we are the weak ringgit has gone past us because the US dollar strength is weakening. So therefore, the strengthening of Ringgit Malaysia will come in for this year. Okay, so for the first quarter 23 strategy, we will have 5 of them. Okay, so my first strategy will be an anticipated wow factor to the recovery team because of the China reopening, and definitely the pent-up demand will be genuine, will be real, and therefore it should translate to earnings for most of the companies under tourism, aviation, airports, gaming, REITs, and also even consumer segments. So during last year itself, we have already a pent-up demand from other international travelers, but that is only 1 million of less than 1 million starting from April until July. Only we have 1 million mark of tourists coming to Malaysia. Then going forward, if we have that 2 million mark, would you think that our GDP will chart higher territory? Or will that translate to more earnings for those sectors that I mentioned here: tourism, aviation, airports, gaming, REITs, or consumer segment? I have a feeling that this year, if there is a pent-up demand after the Chinese New Year period, a lot of things will go up in terms of their earnings under this segment. So that is my view on this strategy itself. Second strategy is that unity government has formed. So comparing to a hung parliament government, that definitely we are better. Comparing to last round of after the Sheraton move, we are better because this is after the GE 15, and this was being appointed in a so-called legal manner. So that's why, given that scenario of unity government has been formed after GE 15, it is already a solid development as compared to during Sheraton move, right? So this year itself is definitely far better than last year, and therefore this will definitely be one of the strategy that I will be anticipating. And what is to be expected in the budget 2023 is very important. Um, During this period of time of the past 1 month, you can actually look into the statement of our 10 p.m. Anwar Ibrahim. He has mentioned quite a number of times that to reduce the living costs and to reduce and to improve infra works, and they will not be a mega high-rise building during his tenure, and these are already a good sign because we know that things will be moving in order for us to have a better Malaysia, okay, in the next 5 years. Although it might be slow still, we did not see anything because budget has not been seen. But that is the tone before the budget. So which means that we could anticipate some of things happening within that, situation. So we are anticipating also solar EV sectors to be part of 2023 focus, and automation, digital technology, especially during foreign workers, lack of foreign workers. These are definitely one of the biggest position that I think people should be looking at, which means that technology sector will be a strong, highly demanded sector. So you can see that actually Penta Master did not fall that much, but instead it went up much stronger as compared to the rest of the technology stocks. So these are the directions you can look at into. Higher medical education, construction sector will be expected. So these are definitely in the pipeline for budget 2023. So let's look at into that. Okay. So if you talk about construction sector, then the third strategy will be building material segment. So that is where we see metal related or even cement related industry will have a strong movements, okay, going forward, especially with the reopening of economic activities in China. We believe that the ASP, the selling price in China, will also impact the global prices upwards, and that will impact the building material prices higher as well. So, given that scenario, we will be anticipating building material to be a very, very uh, highly demanded sector as well, especially in Malaysia and also in various other places. Okay, so if those companies can actually export their steel metal related products, I think that would be very helpful for them in terms of their earnings. So another strategy that I always will rely on is to look at cash and cash equivalent. Okay, um, over the past years, you need not to look at this true focus on this because interest rate environment is still very low during that period. But moving forward, we are going to deal with high interest rate environment. So which means that if the company has high gearing, it will impact their finance costs higher and earnings lower. So this itself, if you just look at these high net cash position companies, you are already in a winning path because your company will not be paying more finance costs, therefore earnings will be higher. So you are already uh, far better than your peers in terms of the companies that you have chosen. So that is another criteria to look at. Another thing is stable dividend track record. So to weather through this very challenging environment, I'll be looking at high net cash, low gearing, and stable dividend track record. This is another winning factor for this year. Okay, Brent oil remains elevated. So as I mentioned, Biden administration has been focusing too much on green energy, green sector, and therefore very low in terms of the capex that has spent for oil and gas sector, and therefore that has lowered down the supply in terms of crude oil. And even if we talk about EV or green energy, they actually backed by all these coal, all these electricity are backed by coal, power plants and things like that. So the more you are talking about EV, the more spending you should be looking at for the oil and gas sector as well. So I think it's worthwhile for you to look at oil prices. It may stay elevated at least for the time being. Okay, so just to recap, the Bloomberg Commodity Index is right now here 110 level. I think it should be able to hit higher position, and Brent prices is about 87 right now. I think 87 right now. We should be anticipating that it shouldn't fall below 75. As long as it doesn't fall below 75, we are still quite all right to invest in oil and gas sector. Okay. Another strategy that we will talk about is the growing automotive segment with the introduction of EV models. So last year we have a catalyst called because they have stopped the the sales tax exemption, right? So a lot of people rush in. So you have the backlog orders. That is for last year, throughout the last year until the deliveries March this year. But this year onwards, we have new catalysts for automotive sector, which is the EV sector. To spice up the automotive sector segment, I think that is a very good catalyst. So last year's backlog orders will improve the earnings until March. And going forward, going into 2023, we will be having a lot of EVs catalysts. So that is also another factor that will be affecting our decision making on investment strategy. So I think this is a valid strategy for first quarter. Okay, so having said all that, let's do a poll. We want to know what is your appetite. Okay, appetite on what is the sectors that you most likely put your money in. Okay, so this one we can't. I mean, there are too many options here. So A will be oil and gas, B will be consumer, C will be REITs, D will be transportation, E will be technology, F will be property, G will be plantation and industrial product and others. Okay, maybe you can just lower down to 1, 2, 3, 4, 5. Okay, five sectors: oil and gas, consumer, REITs, transportation, technology, and others. Okay, let's do a poll here to see what are the sectors that you would prefer. What are the audience's consensus? Let's look into that. My preference this year, I think it would be oil and gas, consumer, and also technology. Yeah. So these are some of the sectors that we like. Okay. Okay. Before we go into the stock picking, I just want to mention here. Let me show you. Okay. So since second half, since third quarter last year, actually we have revamped our methodology to do stock pickings. Okay, so what we have done is to look at their factors affecting them throughout that period of time, what we anticipate during that time, and what can happen during the time, and we put that thoughts into play. And secondly, we pack towards together with the technical analysis, and these are the results that we have been coming out, and we certainly have a good track record since third quarter last year. So we have selected 10 counters in third quarter, and these are the counters that has been proven right on time for that particular quarter, and it has garnered us about 13.8%. If you have bought in on the report date and sold at the end of the quarter, 26th of September, then this will be the result. Okay, and during fourth quarter, we also did the same thing. Where we have done the factor analysis, elements and also team, and packed together with the technical analysis. And this is what we have gathered: 6.8% return for fourth quarter. I'm not saying that we are good in stock picking. I'm not saying that we are, good in timing the market. It's just that with the 10 stocks in hand or 13 stocks in hand, your portfolio are diversified, first of all. And secondly, we are choosing those counters that has catalysts or that has some good earnings and also some good dividends. And you should be able to use that as a good factor to select your counters, and you will be able to gather these kind of returns as well. Okay, so these are some of the factors that I think about for this quarter: recovery, renewables, commodities, and resilience. So that's why we have selected some of these counters under several sectors to diversify the situation, your portfolio, in order to generate some returns. So if you have bought into the counters that we have mentioned for since 3rd of January, this particular month, early this month, then your returns right now will be roughly about 5.3%. So yeah, just to give you an idea that, give you a sense that, we have been selecting good counters and packed with those factors, elements, or theme for that particular quarter that we anticipate, and selecting those stocks with some good net cash dividends. These are the results that we are be getting over the past 3 quarters. So since we have changed this methodology, it has given us a good track record at least for 6 months or about 6 to 7 months period. So I'm not saying that we are good in selecting stocks and good in timing the market, but I think there are some essence into this kind of selection of stocks. Okay, so just to give you an idea. Okay, so we have this quarter we have VIMB, BJ Food, CMSB, DNO, Dialog, Genting, Hector, JTSA, Magni, MISC, MYG, Solarbus, UMW. So we cover most of the sectors. Yes, you can say that this is a very diversified portfolio, but it is also quite driven by oil and gas sector, Dialog, MISC. Um, Building material, we have CMSB, consumer, and recovery is very important. So these are some of the things that we look at, and perhaps you can also look into all these trading catalysts that we will be mentioning here, but also in our reports. Okay, so I just give you an idea that what is the current status, and I give you some support and resistance on those counters that we have selected. Okay, although some of the counters are below the support range, but I still hold because the whole portfolio is still intact. Is like is diversified enough, and we need not to cut off certain counters yet until really the whole portfolio is down maybe by 5%, then we will cut loss. But as long as we have the diversification effect, I think we are able to withstand the whole market situation right now in the market, and we are able to get back on track for the next 2 months. Okay, so right now we are on track already. We are already beating the small cap index and also is KLCA index 5.3%. I think small cap index is roughly around 4 to 4.5%, but my portfolio is about 5.3%. So I think we are able to uh, beat the market using this kind of methodology. Okay, so BNB, I think we are looking at the trading catalysts that their earnings have already bottom out. Their dividend yield are quite healthy. So it is standing about 4%, 4 to 4.5% right now. Okay, so BJ Food, one of the catalysts is that during last year, after the reopening of our Malaysia borders, actually BJ Food earnings has been tremendously growing. Okay, throughout the past 3 quarters. So what if the wow factor of China is coming in? So that is another factor to look at. So it is still holding well around 93 to 97 cents level. Right now it's 102. So hopefully that they can go up even higher with the anticipation of stronger earnings by May. I would think that festive season last quarter will contribute to strong earnings in February. But going forward, I think this will still be one of the good stocks because Starbucks is one of the hangout place for many people. And with the recovery team, I think this is one of the good stock to look at. CMSB, I think a lot of people has been putting this aside, but I think going forward, especially we are talking about Sarawak and also Sabah is taking a new a new role in Malaysia to turn from a state. Right now we call them a state, but going forward it might turn into a wilayah. So wilayah is called region. So therefore, they have more autonomy in terms of their in terms of their funding and in terms of their more developments will be seen. So you can actually check back what are the differences between state and also um, region. So given that scenario is going to be discussed and tabled in Parliament soon, this will be Sarawak's growth going forward. And we understand that CMSB is quite a good building material company in Sarawak, and they should be tagging along with this score, riding on the score, which is Sarawak Corridor of Renewable Energy, and that should be giving them some good outcome in terms of the earnings. Earnings has been tremendously well over the past few quarters, and because of the acquisition of the SCOMIS oil field operation, so that's why CMSB is also not really a building material, but also oil and gas sector in the future. Okay, DNO has been given us a very good opportunity to enter along the the consolidation phase. We have mentioned about EVs, and especially EVs, right? The LED content is super high. For example, in a normal conventional car, maybe it's about 10 to 50, let's say like 10 to 50%, 10 to 15% of the content is on LEDs. But going forward in EVs, you can have the contents maybe near to 50 to 80%. Yeah, so that kind of improvements in terms of the higher LED contents growth will lead to higher demand for their products. And so DNO is one of the LED, one of the world leading LED manufacturers for automotive industry. So therefore, we believe that if this year we are talking about EVs, and a lot of people are talking about buying EVs, and a lot of people are talking about the EVs in town, it's not only Tesla. It can be BYD, other brands. But all these will contribute to higher EV contents, and DNO will benefit. So I think that alone is already telling you that why DNO's share price is so strong, even though technology sector is so weak. Okay, so that is the idea here. Dialog is not only midstream and downstream; they covered upstream, midstream, and downstream actually. And the Pengerang deep water terminus is actually the beneficiary, because during the pandemic, a lot of customers, clients can't come into Malaysia and check out the Pengerang. So right now, everything is open up, so they can have more clients in that area. And you can also see the recent earnings. It has been seeing some good uptick in terms of their profit margin from 17.5 to 17.7. As long as it is not dropping in terms of the earnings or margins, I think it is quite safe to say that this uptick of earnings is telling you that the worst is over and we should be anticipating further upside. And yeah, so timely enough that we can capture it just before the breakout. Okay, so this is Dialog. Genting is involved in leisure, hospitality. It has actually hit our targets 475 to 485. But let's see how we can ride along with this trend going forward. And we believe that with the reopening China borders, you can actually anticipate that not only coming to Malaysia. Okay, so if you have a Malaysia exposure on Genting, right, you should be buying Genting Malaysia. But I'm expecting that China will be going out to various places. So Genting Berhad will be international exposure, and therefore I put Genting into the portfolio. Okay, Hectare REIT. We have met with management. Dividend is superb, and they are in a second tier city, which is not the Klang Valley city. So sometimes you see them in Segamat. You sometimes see them in Melaka. Those parades. Okay, means Subang Parade, Mahkota Parade. So all these parades are under them, and we see that Hectare has been a laggard under the REIT sector, and so it is also under the recovery team. Basically, they are one of the very strong dividend players in town, and therefore we put that into our report. Okay, JTSA, I'm just banking on the CPO price to be uplifted, because in tandem with crude oil prices, we should be seeing CPO price rebound as well. Hopefully that CPO traders will be able to realize that China demand is going up, and that should actually lift the CPO prices higher and translate to better earnings for these plantation players. Even though their share price may not be as strong, but we may anticipate that dividends are strong as well. Okay. Next is Magnitech, resumption of business activities in Vietnam. This has been another recovery team, but they are into garments, flexible plastic packaging goods, and corrugated cartons. So with the Vietnam business operation activities resuming since 2022, we should be anticipating a stronger growth going forward. So packaging industry is also quite healthy in this cycle, and especially everything is about packaging. If you talk about shipping industry until your daily goods or even daily food products, also you need packaging. So I think it makes sense for you to go into those plastic related companies or packaging companies, and that should be the recovery team going forward. Yeah. MISC also related to this energy related. So I would think that the higher tanker rates should be should be there. Okay, given that a lot of diversions and a lot of tensions being in Ukraine Russia region, I would say that MISC will be benefiting from this higher tanker rates. So given that this crude oil is still very much elevated, which means that the demand is also strong, or supply is very low situation, MISC is likely to benefit out of this scenario and should be able to chart higher territory. Right now we are around 7 ringgit zone. I hope that it can break out above 7 ringgit and 68 cents. Going into 8 ringgit 19 cents, that would be the perfect situation for us. Okay. MYG, this is part and parcel of the unity government pick. I would say that anyone that is taking over the government shouldn't shouldn't affect their business too much. If you notice throughout the past few rounds of change of government, it has tanked very severely, but it has also rebounded very strongly from that. So near to 100% return after the limit down position since Pakatan Harapan time and also the Lanka Sheraton, and right now. So we believe it is very sticky e-government services, and especially right now, foreign workers is in plan to come in more. This should be able to help them going forward. And the wild card is definitely when if the government is reinstating the GST, MYG will definitely benefit out of this situation. Okay. SolarVest, we have been seeing this is, I think earlier on it was around 80 over cents, and right now today I think it's about 105. Okay, so this has surpassed definitely our resistance, and it is within our expectation. It's just that we are caught by surprise that it surpassed so fast. Okay, into the above the resistance, and some of the catalysts out there is firm order book that can last them for another 1.5 years. And SolarVest is also venturing into EV charging port via Power B. So that is also another catalyst, small catalyst, but as long as we are looking into EVs and solar related, then people might think of SolarVest. Yeah. And UMW involves in 4 business division. Automotive is the one that is generating 80% revenue. And right now it has broken out very significantly off this 3 ring at 36 cents level. Next target that it has already go into our target zone around 364 to 395. So automotive, like I said earlier on, it is definitely one of the sectors that I've been looking at, and with the sales orders being delayed, backlog orders being delivered until March or June this year. That is already one catalyst, but next catalyst will be the higher demand for EVs, and that should bring UMW into higher territory. Okay. So those are the 13 counters that for this quarter. You may actually track on how well our performance for those counters. And in our reports, our market pulse report, we will update daily. But so far, it has been quite positive throughout the past 3 quarters. If you buy on the first day and sell on the final day of that particular quarter. So far has been turning positive since we have changed the methodology. Okay. Then coming to the budget related sector, we just want to reiterate what is going to be anticipated and where are the goodies at. Okay. So recently our 10th Prime Minister has been mentioning about go ahead with most of the construction activities. So construction sector will be next phase after the earnings. I think people will start to put their money there to anticipate some of the jobs to be done. I think one of the best counter you can look at will be Gamuda. Gamuda has cash right now after disposing the highways. And what they can do with government is that if they have the cash, then government need not to leverage only on them on their own coffers, but they can actually tap along with public listed companies' cash position, so to reduce the burden on government. So that is one of the idea. So I think Gamuda IGM has that cash. You can look into that. Consumer sector, I think it will be good based on what we understand from the recovery team since last year. China is a new factor, so I think we'll have higher cash assistance. But I think if if the subsidy rationalization plan it will be coming in this year, that will actually be good for the poultry sector. So you can actually look out for poultry sector as well. Technology, I think we will look into demand from the overseas, but overall, you have to look into what are the demand that is very firm. Like for instance, automation is definitely higher demand. So Panda Master is one of the pick. If you're looking into LED, then DNO will be another pick. Okay, so that is how I look at it. Telco side is also positive because 5G roll out, and Timecom is one of them that we have picked last quarter, and DG is another one that we have picked last quarter as well. So we have done two picking last quarter. So healthcare positive allocation. You can look into medical tourism is also coming back. A lot of people can come in and treat themselves, treat in our hospital because it's cheaper as compared to other countries. KBJ is one of them. TMC Life is also another one of them. Automotive positive with the EV policies and transportation logistic. We can look into shipping industry. Tourism, we can look into more incentives, and I think this year itself, we can look into aviation. Airport has been up since we have talked about it, 6 ringgit to 7 ringgit. Solar EV sector, property is neutral, so we need not to focus too much on property. Foreign workers, you can look into MYEG, M40 cash aids, and also 2% reduction. These are some of the, just to reiterate what has happened in budget 2023. I think they will also take care of the M40 citizens. So so that will be some of the ideas out of this quarter. So I guess it has come to an end for this session, but I will take a few minutes for a Q&A. I think a lot of people would be interested to ask me questions, and you can ask me anything if you want to. And also, I think just now we have done a poll on the sectors, right? Oil and gas, consumer, REITs, transportation, technology. So what are your picks? I really want to know, your favorite sector, and hopefully that we will be able to give you some insights on that sector if you want to know more about. Okay, so yeah, Kay, maybe you can show me if there is any questions in the Facebook. Let me also check my site, see whether I can see any okay, any questions? Yeah. Okay, so for okay, a lot of people have chosen consumer sector, about 50% of the audiences, and oil and gas sector will be having about 25%. REITs will be 15%. Transportation will be 10%. So that is the idea here. I think a lot more people are more conservative, so that's why they are choosing consumer, or they are choosing consumer because of the recovery team. That can be also another view towards that. Okay, yeah, quite good. Okay, okay, let's see. Any please for a TP of your recommendation. Okay, let me go back. Just some people ask about my TP of my recommendations. Okay, if you go back to this particular slide, or you can go into my report, I will have this table. And my TP is resistance 1 and resistance 2. You can see that this column here, okay, resistance 1 and resistance 2. So these are the, wait, hold on a second, this is fourth quarter. Okay, this one. Yep. So BIMB, you can see that it is 278, 294. Those are the targets for the counters, and also cut loss and stop loss support as well is there. But overall, you have to look at the totality of the basket. If it is still positive, I will not tweak too much on the cutting the losses or whatever it is. I will try to maintain as diversified as much as possible, and so to give me the good diversification in my portfolio. Okay, so that is the whole idea. Banking is in my list. One of the companies is BIMB. Okay, because it is one of the one of the laggards under that sector. So I choose that. Although it's not giving me too much alpha, but as long as the whole basket is still positive, I think it still makes sense for me. Let me go back technology. Any more questions? Oh, I saw another question is talking about revenue. Okay. Revenue, I think right now there is a corporate tussle. We are not, I mean, normally when there is uncertainty in this kind of situation, we will not continue to look into that, although it might give you a lot of returns. But I believe that it shouldn't be your main portfolio. You can use 2 to 3% to trade out of that situation, but I wouldn't suggest you to look into that as the all-in kind of stocks, because if they are still um, if they are still having this tussle and the earnings are still not growing back towards their previous level, I believe that it should be we should take a setback, take a back seat for this scenario and try to reanalyze the situation again when the earnings has recovered. So most of the companies that have been choosing is definitely have earnings, have net cash, or high net cash, low borrowing, and high dividend payment, dividend rewarding shareholders. So those are some of the main criteria that I put on my head, and very mindful on selecting stocks. And secondly, after that, we will select those on the right of the breakout. You can say that is part and parcel of fundamental plus technical analysis, but overall, you can actually look into how we select stocks. We must be very safe. It must be a very safe nature company for us to uh, put it in our strategy report. Okay. No tech. How do you see Emulus? Okay. Some people ask me, yeah, tech. I have been putting in one counter, which is DNO. DNO is one of the tech counter that we have put in. So we select those that is stronger in terms of their nature. First of all, in terms of earnings, and uh, if we are seeing that some good growth in terms of their earnings and also technical analysis point of view, we will put that. Amylus, we did not choose is because the strength is still not enough in terms of their momentum or even in their uh, upside potential. So that's why we will pick those that we are familiar with, and we have we have the catalyst to back us up on that. Okay, so some people is asking me, is it important to set cut loss? Is cut loss need to move up when the stock price has been moved? Yes, this is actually a very good question. If you found that your stocks has been moving up higher and higher, you should be trailing your stop loss upwards. And once it triggered, and you are secured with your profit, so that's why it's important you have your cut loss, going in tandem with your stock price. Okay. What is your take in SAM? Okay, SAM, 7-Eleven Malaysia instead of BJ Food. So BJ Food, I have seen a very tremendous growth, right, since April. Same case with 7-Eleven. But if you ask me to hang out in, 7-Eleven is a bit hard for me to hang out there. Okay, but if I want to hang out, I would choose some coffee place and things like that. So we have seen a growth there, and although I'm not saying that, I'm not belittling that 7-Eleven's growth is not as huge, but it's just that we can see that growth since April is strong, and we should be able to replicate that pent up demand with the China tourists coming in. Okay, so that is just an idea that is similar growth, and we are looking for places to hang out, and if China tourists are in, therefore this would be some of the names that they would be choosing at. Because if I look at cafe industry, yeah, there are a lot, but if you are looking at just Starbucks itself, it's a very good branding. But if you look into 7-Eleven, you have 7-Eleven, My News, Family Mart, and things like that. Yeah, everywhere. I mean, convenience store is everywhere. So uh, I will still prefer to look at food and beverages instead of convenience store. Although convenience store can also bring you the strong earnings. Okay, yeah. Okay, so that would be it. Any other questions? USA airline recovers. What do you think about Capital A? I think Aviation has been good since the past few weeks, since the reopening news has been out. If you notice this kind of movements, I think right now you should be taking profit. Why? It's because earnings will be coming in and not so good, not so decent, still loss making. So people will sell off the shares by then, and then will position themselves again and around before the earnings. So um, I would say that Capital A has the potential, but it has been rising quite steeply, and therefore it doesn't entice me to go in right now. Yeah. Okay. So I would taking two more questions for now. Okay, some people are saying that tech is since they are in downtrend. Okay, so you can actually look into different way of thinking. I would only pick those that is uptrend and consolidating counters. If downtrend, there are more risks. Okay, so it depends on how you want to take this. As long as they have net cash, low gearing, they are in uptrend, I will be picking. So counters like in a downtrend, and although they have a lot of cash, I don't pick it. Okay. Um, okay. Consumer stocks like gold. I think just now we mentioned Tome and Pokong. We are looking at that as a very cyclical play, and I don't think there is a lot of attention. Uh, so what you can do is you buy ahead of the earnings and sell after earnings. So that is what we want to see in Pokong. So Pokong normally after the earnings they will gap up, okay, then sell off until the next earnings comes in. So that is how I look at gold related counters. So I'll take the last question. Last question would be Hata and Top Glove. I think glove counters, there are a lot of value in it, uh, but the sentiment is not right for them. It may be just trading sideways or very minor uptrend feel from here. Okay, let's say Top Glove is about 80 over cents. Maybe the max will be about 1 ringgit. Hata will be around 160, 170 right now. The max maybe is about 2 ringgit. There is no new catalyst that can drive them as crazy as 2020. So that is for sure. And we have been able to tackle pandemic right now since we have gone through 2 years of pandemic. We know how to deal with it. So therefore, gloves situation or maybe treating the COVID as a normal flu will not bring gloves into higher territory. So that is what I can see, what I can understand in gloves. But doesn't mean that they cannot go up higher. So 80 over cents top glove can also go up to 1 ringgit, which is quite substantial, 10 to 11, 10 to 11, 10 to 15% gain as well. So I think trading opportunity, yes, there is. But if you want to ask me a long-term view, long-term perspective, I think maybe the peak has already passed us. And maybe right now we should be looking at a trading range rather than holding it for new uptrend cycle. So my view is trading buy on gloves, but not a very long term holding. It will not have a very good catalyst for us to hold for very long term. Okay, that is what I can say on gloves counters. So it's a trading buy rather than there are unless they are into the uptrend territory, like most of the stocks that I have mentioned. As long as they are still below SMA 200, I think we should be avoiding those counters. Yeah. Okay. So I guess that would sum up my today's session on market outlook. And thank you so much for tuning in. And for those that you are celebrating Chinese New Year, happy Chinese New Year to you all. Safe journey back home. Thank you so much, and hopefully you have a good trading quarter ahead. Thank you, and see you again next quarter. Bye bye.